to do. When we leave our homes in the morning, we're bombarded with 6,000 advertising hits through Facebook, through Twitter, through Instagram, through television, through our phones, and through our communities, and through the computers. And so all of these things are impacting us every day. So if you don't have a program for your mind, then your mind is going to be programmed. You'll find yourself doing things that you did not know, and that they affected you, that they, through marketing techniques and strategies, that they will create a thirst within you. You've got to have someone that can see something in you that you can't see, that can take you to a place within yourself that you can't go by yourself.
Stop overthinking everything so much. Realize that while you are trying to do a lot of things in your life at once, and you are better than you were yesterday, also realize you don't have to try to do anything. You just have to do, and you just have to be. You have to understand the concept of you're not actually really doing anything, you're being done. Each and every day is an opportunity to get something from the day rather than just going through the day. But there are a lot of things that we can't always control. We can't always control the temperature outside. We can't always control what the birds are doing, or what the fish are doing, or what the animals are doing. But we can control what we're doing. We can control who we're hanging out with. So in a sense, we can get some control over the anxiety that we have. And the way that we're going to gain control of those things is think about some of the hurdles that we may have, some of the things that are blocking us from making quick action.
The reason that I think belief is important is because, like, when you're young or when you do something and you're a novice, right, and you start out doing it, and you might think you can do something with it, or you might not. You might do it and it's being driven by your passion. And then somebody comes along that's a little bit older, even more experienced, and they can see it in a way that you can't see it, right? And so I think it's important with belief, because if a person believes in you in a way that you don't believe in yourself, you can rent that person's belief until you get strong enough to possess your own, right? And you use that person's belief to fuel you every single day, right? Because you can have a level of belief with what you're doing, but you can go back to a certain set of circumstances that tell you, nah, it's not going to happen. And so you rent that person's belief until you get strong enough to possess your own.
I want to share with you what I learned from generating over $20 million worth of sales from a single YouTube ad campaign. And this was from about $6.5 million in ad spend. And it really just comes down to understanding the ad targeting, the type of ad copy, and the type of funnel you should be running on YouTube ads.
Life is an adventure, and it's going to be a challenge. And get ready, because you're going to fail your way to success. You're going to get slapped around by life. And don't spend time complaining about it and telling everybody 80% don't care, but 20% glad that you do.
I think the number one thing that keeps people from being successful is the sometimes it's about around you and how you see, because maybe you grew up in a household where things weren't accepted, or maybe your parents didn't accomplish things and they put that kind of insecurity on you. These are the things that I feel like sometimes it prevents people from doing what they want to do, because all it takes is somebody wanting to take a step. And there are certain things that a lot of people in this world see, I think, in their minds, and they're just not going to do. Like, I used to always try to pull a lot of people and be like, you can do this, you can do this. But the people that hear that motivation over and over again, sometimes they take that step. Some people just have it in them. Early, it just starts. And it just gives muscle memory of just doing things. There's so many things in our lives that we're scared about, but we're still here. We made it past all these things. And if you fail, so what? You start over, do it again. But most people, that fear of failure is the thing that I think prevents them from really being successful. And also, it's like a lot of other things that are just difficult to do. When you tell people the answer to success, it's a lot of hard stuff. Let your success fool us.
Rashid, can you hear me? Trying to unmute your mic, Rashid. Rashid, can you hear me? If you're able to unmute your mic, please do so. I'm attempting to on my side, but it's not letting me for some reason. Let me try here. Hey, Jamal, can you unmute? I'm trying to unmute folks. For some reason, I'm not able to. Can you unmute yourself? Okay. Hey, Jamal, how you doing?
Hello?
Yeah. Can you hear me?
Oh, I'm freezing. Hey, how you doing, Greg?
Doing great. How you doing?
All right, millionaire boss, man.
Good. Okay.
Glad
Again?
I'm glad I'm attending this meeting. This is my first meeting I'm attending with this money concept.
Oh, okay, good. Well, you've been around me enough. You've heard a lot of this before. And actually, I was going to share just a little bit, expand on it just a little bit from what we've been doing with Manny over the last couple of weeks. Has opened my eyes to broaden my eyes as it pertains to what I see in the church. I was going to talk a little bit about that too. So let's go ahead and get started. It's 9:05. Me, you, and Rashid. That's DN is connecting. But we're going to go ahead and get started. I'm going to just start out with. I usually start out with just a quick little talk about the a mindset and how important it is. And if you've been on with any of the sessions with me before, I talk, and I'll just kind of keep it sort of quick this time, but I kind of talk about this. I got an image I'm gonna pull up. This would be the time that it doesn't want to cooperate with me. But this is not the one. Let's get to the one. Okay, yeah, this one right here. All right. This is my picture. This is my image in depicting smart money, okay? And I bring this up. This was shared with me, and it made a lot of sense. I really connected with the image here, and hopefully you guys, I can explain it in a manner that makes sense to you guys. Basically, what I have come to understand from the awesome educators associated with the IML platform is something very, very basic about trading and the participants. And when we start trading, there's a lot of discussion, or I know when I started trading, there was the term batted around like retail traders. And I had kind of accepted that, like, okay, well, I'm a retail trader. And then as I continued to learn and continued to, stay around those educators, I started to understand that that's not a good place to be. Retail traders get eaten, okay? Retail traders are food in the market. Retail traders get their bank accounts taken from them on a daily basis. If your mindset is that of a retail trader, if your skill set is that of a retail trader, you are going to get eaten. And you're going to get eaten by what's in the picture there, that shark. And the shark represents the hedge funds, the big banks, those big, large institutions that pump billions of dollars into the market. And, you know, again, we have to, you know, just have to be real about this, that, you know, our accounts, none of our accounts move the market. You know, I mean, we're fortunate as, I won't say retail traders, but we're fortunate as individual traders to be able to start our accounts with very minimal amounts of money. And when I say minimal, I say, people start their accounts with $50, $200, $1,000, $5,000, $10,000. All of those, by comparison, are very minimal accounts to the millions and billions of dollars that are pumped into the market that actually move the markets. When we see candles form, when we see wicks jump up and down, and responses to the market, prices in the market respond to news events or other kinds of things. Again, you have to know that those are transactions that are taking place that are, billions of dollars. This is weak transactions. You know, when I used to hear about, the United States selling wheat to Russia or those types of transactions, I had no idea that those transactions are reflected. Those are multi-million dollar transactions that are reflected in the currency market. When this country sells arms to another country, or if we buy arms from another country, again, millions, multi-million dollar transactions. Those are the types of transactions that occur all of the time. Then those are the kind of transactions that move the market. And the sharks in the market, again, will control the waters. They control the market. So, and we're not going to, our bank accounts, aren't going to be like that. We can be very, very successful and still not have billions of dollars in the market. So what do? You learn to do what you see these little striped fish alongside the sharks. You alongside the shark in the photo, you learn to swim alongside the shark. These are called pilot fish. This is a true act of nature here. They swim along. So when the shark goes left, they go left. When the shark goes right, they go right. When the shark goes down, they go down. And most importantly, when the shark eats, they eat. They have the same mindset as the shark. They show up right where the shark is going to show up. And that's the mindset of smart money. That's institutional thinking. That's learning to trade like the banks. And that's what we're going to talk about a little bit tonight. So let me bring up, I've been, the other thing I do on this session too, I tell on myself. I think that's real good for me, it's selfish, for me. And also I like to highlight, we can always talk about, where we went right, where we made money. Full disclosure, I had a very, 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 very good week. But there was this one trade that I wanted to talk about that I can certainly use as an example of smart, how we use smart money. And then again, just through full exposure and full disclosure, show you a mistake that I made in the market this week. And again, it's intended to help me, help you see it and be able to identify how to avoid similar traps in the market, and hopefully save you a little bit of time in the market. Let me make sure. Oh man, okay. All right, so now I'm sharing my screen. Hopefully you guys can see my screen. Okay, so real quick, the smart money or the institutional banking, as it's referred to, is not that difficult. Okay, again, it's a lot of what we already know. It's a lot of what we already trained at, but it's also you kind of learn to look at some of those concepts just a little bit differently. And I guess most importantly, what most stands out is how we learn to look at support and resistance as a retail trader versus how we look at support and resistance as a bank trader. So I'm gonna go through this. Let me go. Well, first of all, first step, and this is pretty consistent with most trading styles that I've seen, most trading strategies that I've seen, usually start out with an analysis of the overall trend of the market. Okay, where are we at in the market? That is so critical to anything that you do when you set your eyes on the market. If you're looking at the scanner, or if you're looking at, just, naked charts or whatever you're using, the first thing that you have to identify, and I say have to, the first thing you have to identify is where are you in the market. It is no joke. The trend is your friend. I heard that that cliche when I first got involved in the training platforms, and the young lady, it was a woman educator who did the IML 100, 200 series when I first joined. Daisy, I think was her name, wonderful educator. But one of the things she drilled home in my head was that the trend is your friend, and she is absolutely right. So, and how do you determine where you are in the market? The best way to determine where you are in the market, because you're trying to establish the overall trend. You may see different trends at different time frames of the chart, but what you want to understand fully is which direction is the market going, so you don't kind of get fooled when you look at lower time frames and might actually see something different. But everything is going to be controlled at the higher time frame levels. So we're looking at USD CAD, and we can see now. I got my camera in a little bit in my way here. Got to tilt it a bit. So I don't, per se, I don't use any indicators per se. Actually, I take that back, because I do use the Fibonacci, but I don't use any EMAs and that kind of thing. There's nothing wrong with that. If that's how you get it done, then those are the the tools that you use. There is no one way to trade this market. No one way. There's no, I say, like, I don't know if you guys, the old Bruce Lee, no way as a way. You know what I mean? You get into a fight and you just do what's effective in order to get you the outcome that you need. So we approach the market the same way. But with that said, I'm gonna use some lines and indicators such, but I use them mostly just for, again, a visual presentation. And not much more. Okay, I don't do any sort of analysis on the trend lines and that kind of thing. Again, just nothing wrong with it, but I don't trade like that. I don't trade based on that. But anyway, so given the direction of the market, we can easily see, and like I said, you don't even need a trend line to establish that. And what was suggested to me was that I needed to learn how to trade with my eyes. Okay. So we'll come to the market, but in the beginning, this is helpful, again, just to be able to identify that, again, the market is trending in a downward direction, okay? And now, just real quick, that's further established when we are able to look at the direction of the market, looking at, okay, here we have a high, we have a lower low. I'm sorry, I'm starting here. We have a lower high, a lower low. We have a lower high, lower low down here. Again, lower low here. Okay. We have a lower high up in here. Anyways, but what you'll understand is that what really dictates the market, determine the direction of the market, is the lower lows is what you're really looking for in the market. So that's really, I was trying to grab that line, won't let me. But anyways, but again, we've established that the market is downtrending. All right, so with that in mind, we can kind of then move to the lower time frame. Oh, let me stop. Okay, so once we identify, again, the direction of the market, we start looking for certain things in the market. We start looking for equal highs and equal lows, because, again, one of the things that I would encourage you to understand or research is that the market basically moves to do two things. The first thing the market is moves or they can do is, of course, it can what they call search and destroy. I'll explain that in a moment. Second thing the market does or kind of look for is what we call it will find or rebalance itself. So we call it a rebalance in the market. Okay, and I'll explain both if I could spell. Whoops. Rebalance. Okay. Dang. But you know what I mean. If I can't spell it, I'm gonna spend all day trying to correct my spelling. Okay. All right. So the market, like I said, is going to do one of two things. It's going to search and destroy, and I'll explain it, or it's going to rebalance itself, and I'll explain that as well. And what we do here, while we're at the higher time frames, we start eyeballing for those areas. Okay. And now another concept that again, just I encourage people to look more into is you hear people talk about areas of liquidity, and basically liquidity represents where there is money in the market. And let me just back up, because all of this, number one and number two, is all of really the question is, and you should be asking yourself when you're looking at the market, where is the money? Okay. And once you can kind of get an idea where the money is in the market, then that's where the price is likely to go. We don't know exactly where it's going to go, but where we think money might go. So I'm just going to use my little highlighter here to identify what we would kind of refer to as equal area of equal highs. Now, also too, retail versus institutional trading or bank thinking, you know, you have to kind of approach the market from a standpoint of areas, okay, and not so much like, you know, exact price or something. So when I say there's equal highs, I'm talking about this area represents generally where price has generally been equal. Okay. And what that means is that price is going to at some point come back into that area. And it's important to identify those areas as targets in the market and also kind of get a sense. Now, there's always areas of liquidity above and below the market. There's another area here where we have well, at one time were equal lows, okay? And you can see how price ran through this area and basically eliminated any equal lows in this area. So price came into this area and took out these equal lows. So if anybody, and when I say took out, if anybody had stop losses, pending orders and that kind of thing, all that stuff would then have been erased because price pushed through this area. So now, again, we just kind of move down. Again, just using my eyes, just trying to look for where else are there areas of any equal lows. So actually, I would probably have to come all the way down here into this area. And again, I'll pull it all the way across as an area that represents, you know, equal lows. And then another one down here, but I'm not gonna go that far just yet. Now, the second thing, like I said, I want to identify are areas of where the market may, where the market may rebalance itself. Because I'm now looking for where the market is. If it has to rebalance, that means that it's out of balance. And basically, to explain, you know, market imbalance is really referring to any areas in the market, any areas of price that you see that have been traded into, but it's only one-sided. Like, let's just take this area right here. I'm gonna make it a different color. Let's look at that area just for a second. I'm gonna shade that just slightly so it distinguishes itself a little bit. Okay. Now I say this is an area of imbalance because you see that there's no, it's only, actually I'm gonna use an arrow, it might make it easier to look at. There's only one type of transaction that's taking place in this area. In the market, there has to be this, and again, that's why I started out when I was saying, you know, talking about transactions. Don't forget, like I said, that's what's going on here. Okay, stuff is getting bought and sold. Okay, stuff is getting bought and sold. All right, and so just like with any transaction, there has to be two sides of it. You just can't walk into the store. If you walk into a store and your money never leaves your pocket or your card never leaves your pocket, there has been no transaction. You have money, but you haven't bought anything. Okay. Or in the same, you know, they can't just sell you something without you coming out your pocket. Well, the same thing. So in this case, there's been a lot of selling pressure, okay? this candle, this open space here represents selling pressure to which there has been no buying pressure. There's only a red candle from here, this space to the top of those wicks. It's only been selling pressure. Same thing in this area here. There's only been selling pressure from the body to the top of this wick. So again, that represents what's called an inefficiency, price inefficiency, or price imbalance. And guess what? Price is going to go to, again, it has to reestablish the imbalance. There cannot be an imbalance in the market. Everywhere, like I said, it's a transaction. Everywhere there's a sell, there has to be a buy. Everywhere there's a buy, there has to be a sell. Now, the price may not come all the way into the area, but more than likely, a high percentage of the time, price is going to come and fill this area at least 50%. So my targets always become, if I'm trading into an area of imbalance, it's always 50% of that open space that I'm gonna trade into. And with a high degree of success, I usually pretty accurate. Okay, so we've identified the equal highs. This is the shaded areas. And then we have identified the areas that I'm pointing to as areas of imbalance here, and then areas of imbalance here. I'm gonna bring up this other shaded just to draw a little, little contrast to those two areas. Okay, so now here's something else, and we're gonna get to this. This figures into what I didn't see. You see this gap here in price? There's this wick. This is bearish candle. Well, it's a small wick, small candle, small wick, opening, and then another wick to the upside. Everybody see that, I hope? I bring my arrow right through it. Boom. It's a big space there. It's a gap in price. And guess what that represents? Now, that's your cleanest example of what we were just talking about in terms of imbalance. That's a pure imbalance in the market. So again, price has to fill this area. Now, when it's going to fill, well, I shouldn't say has to. It's a very high probability that price is going to fill this area. And you know that again, because again, it's like money on the table, and the banks, this process, the way it's set up, it's not going to leave any gaps. It's not going to leave any imbalance. It's not going to leave any money. Okay, it's going to make those. It's going to balance those transactions. So that's something else we know. So again, on this higher time frame, we come away, and this you don't see these gaps in the market all the time. But when you do see them, there can be significant points of information that you want to pick up on and pay close attention to. Okay, so we've come away with we were looking for two things: areas for search and destroy in terms of equal highs or equal lows, and then area of inefficiency or rebalance, and we found those. And then in addition to that, we just see this gap here, which still falls into that bucket of an area of imbalance, or area that we might consider the market's going to rebalance itself. So then you say, okay, well, I got this information, well, what the heck do I do now? All right, so then you start coming down the time frames, looking for where can I get into the market and leverage this. So I see that the market is trending down. Okay, so where could I get into the market and get in a sell on this particular opportunity, because it looks like that's what it's giving me. It's giving me sell opportunity. So where could I get in? Okay. So typically, again, with smart money, let me move this for a second. Typically with smart money, we're looking for where the market pulls back to, okay? Because actually fundamental to smart money is that, we want to buy at its high a point as we can. I'm sorry. We want to sell at the highest point we can. We want to buy at the lowest point that we can. Okay. So given the position of this market, it's actually kind of returning to a low point in the market. And you can see that basically here it started a formation of rebalancing itself. You see it has gone up, and then you're coming back to the same area where price took off from down here. It just kind of did a some might say like a little cup or something, but not exact but you know, we can kind of see that price has gone up, rebalanced itself, and returning to the same area that it took off from. So at that point, actually, given that information that price has kind of come back to this area, I really might be looking for a reversal at this point. Okay. Now, so with that in mind, again, the question would be, well, where would I get in? Okay. Now, what I'm looking for, since price is returning to the same area that it left, okay, and that's just what price does. It, you know, just kind of repeats itself. Now, obviously, it could continue to go in a bearish direction, or it could, you know, turn around and go in a bullish direction. One other thing too, let me throw in here. This is US dollar, Canadian dollar, so I have to also kind of consider the DXY here, which is the dollar index. And that's going to actually probably give me some determination as to whether or not which bias I have in terms of whether or not it's going to continue in a bullish direction, a bearish direction, or turn around and go into a bullish direction. I can tell you that the dollar is weak as heck. So I probably would continue to sell this. Okay, a little pullback. I'm looking at the dollar, the DXY. This is the dollar index on the daily chart. It ended on this doji here, and I guess a low right around 90, looks like about 96.44. Yeah, and ended the day 96.96. But you can see again, the dollar, the US dollar has been on a dive. The US dollar has just been on a steady dive. Let's look at this on the day real quick. Look at this. Yeah. So that's through May. Yeah, it's going back to March. This is all, again, this is all coronavirus stuff, coronavirus influence stuff. But again, we can see that the dollar has been on a steady decline. Actually, on the day, it looks like it's recapturing a little bit. So here's why I bring that up, because again, you have to look at the DXY when you're looking at any of the US currency pairs. And that, you know, again, it's going to give you this particular pair is not a direct correlation, but again, the dollar is weak. So I'm not sure that I would really trust what I said a moment ago in terms of looking for a reversal here. It will price will probably continue down into this area where we already identified that there are equal lows. Okay. Again, just given the, and again, we have more confirmation probably Sunday into Monday to see if the dollar gains any strength. But for the sake of what we're looking at now, and the information we have right now, let's say the dollar continues to be weak. We trade down into this area. Again, you can see it's like 200, almost 230 pips. And again, that's just halfway into the box. I would trade about halfway into that box. We're about 230 pips. So it's a really decent move. And let's just say, where might I get in? Okay, if I'm gonna continue to sell this. So now I'm gonna go down the time frame. I'm gonna jump all the way down to the hour time frame. Okay, so where do I get in? Price is here. Let's move this. Now we're on time. Price is here. Okay. And what I would want to do, again, I'm not gonna just jump in right here. I need price to pull back into an area that I would want to get into trade. All right. That again, smart money lets price come to us. Smart money lets price come to us. We don't chase price. Let price come to us. All right. So by that, and that's what this is, the one indicator that I use fibs, use Fibonacci. And basically, again, if I'm selling this, I'm gonna go from my high to the low, and my golden pocket is referred to is an area between the 78 and the 88 level fib. And if you don't know, fib retracement tool is it's a measurement, okay? Fibonacci, I encourage you to Google it. It dates back centuries in terms of the accuracy associated with the Fibonacci measurement tool, and is used across countless number of industries and science and mathematics and all this other kind of stuff. And we, of course, use it as a tool in trading. And again, it's just a tool. There's no magic to it. It's not 100% accurate. It just gives us some idea. For instance, where price, if it trades back to, if price comes back to this is just for me. Let me use my arrow. I got really big with that. If price comes back to this area, trying to make it a little smaller and turn it around. If price comes back to this area, let me make it a little smaller. I would be comfortable with continuing to sell if price comes about into here. Well, I'll say about in there. So price comes back into here, I would sell this back down, okay? Now, you can see price has already made a move to the downside from the 50% retracement. So price retraced 50%, and again, 50% of the last highest high. That's what I'm talking about in terms of, 50% all the way to 100%. That would be a full retracement. And so, this is not a bad level to get in, and it looks like it's already rejected away from it. So maybe that I probably would have been waiting and actually maybe not gotten in, because again, I'm kind of trained to wait for price to pull a little further back. But anyways, needless to say, it looks like it's already rejected off the 50% fib level, which is fine. That's just like a fair market price. I want a fully discounted price up here. But anyways, it looks like it's and it could, when the market open, it could retrace and go back up. I don't know. But for right now, what we see in front of us, it's already rejected off the 50 fib, and looks like it will continue to push down. Okay, so again, where do I get in? If I've missed this move, I'll be honest with you. And like I said, and again, you can do what you want, but my suggestion is that you do not chase price. You just don't. You do not chase price. It's not gonna. It'll work sometimes, but again, you just get caught up in retracements and pullbacks and all this other kind of things that you can avoid. I have learned that I'd rather not be in a trade. And even though I might have to sit there and watch the trade go 200 pips and without me, I understand nowadays, of course, that there will be another trade. So, but I'd rather not get into a trade or miss a move than get into something that I really doesn't meet my checklist, and then have to sit in and regret it. So, but all of us set our own rules, have your own tolerances and such, and you act accordingly. But anyways, that said, it's rejected off to the 50 and probably pushed down. Like I said, I'll be looking for a move a little further up. So even with this, I would still need to see some pullback before I got in. So again, I wouldn't get in here, but let's just say for the sake of discussion, okay? For the sake of example, let's say it's for the sake of example. So I'm on the hour and price is here. I'm gonna go down again. I'm gonna go down to the 15-minute. I'm looking for entry. Price is here. Again, I just would need some pullback. Yeah. In this example, men and women, I would need, at minimum, it would have to pull back to the 50 in order for me to, that would be basically like a retest before I would take it down here. Again, this is a moving target, moving price. And when the market opens up on Sunday at 5 shucks, because the market is still moving, folks. What we see is shut down, but the market is still moving. We can't participate in it, but that's why when we get to the market on Sunday, you'll see, of course, that this price would have moved either up or down, but it won't be in the same spot. It just doesn't, die down. So anyways, that's what I would need to see, really. I would need to see it pull up here. And that would make sense for me because now if it pulled up into here, now we're talking, because the next question is, if I got in here, if I'm waiting for it to pull back up here, the next question is, okay, well, where do I set my stop loss? Okay, and then another very, very, I say appealing thing to me with respect to smart money is that we typically go after very, very tight stop losses, because the idea is that we're looking at establishing high risk to reward. And when I first got here, I was a little behind the curve, I guess, with respect to understanding risk to reward. And I was, for instance, I was a little more caught up into, and this is when I was taking a lot of trade ideas, it was signals, what they call them. And I was caught up in where I was like, asking that question, and I understand the question. Everybody asks it, how accurate are your trades? How accurate, And you know what I know today, and you can test it for yourself. Accuracy is secondary to risk to reward. Okay, because you can trade at a 30% accuracy or 40% accuracy and still make money in this market if you understand risk to reward. You can't do that if you don't understand risk to reward. Again, then you definitely have to be spot on. But risk to reward just puts you in a position where you're almost willing to sacrifice, again, very, very small amounts to gain very, very big amounts. So when you are wrong, and sometimes we are wrong. When you are wrong, okay, boom, it's not a heavy damage to your account. It's very minimal damage or loss to your account, and then you're able to. You can actually oftentimes you can stay in the same trade and just identify a new entry. Well, again, another very, very tight stop loss. And then oftentimes on that second entry, if you didn't get the first entry, you can get in and then, of course, not only just recapture what you may have in the 10, 20 pip stop loss. If it hit that, you would also, then again, you're off to the races, because like I said, when we were on the daily chart, this is a 200 pip move. So, I would be okay to be wrong on a 20 pip stop loss. I'd be willing to hit a 20 pip stop loss and then be able to re-enter that trade and have zero, just find a better entry and have zero drawdown and then go 230 pips. I'll do that every day, all day, anytime, versus some of the other trades that again, just don't put us in those same situations again and again. So, and again, there are some details to that. And I would encourage you to go to the academy, find those educators that specialize in smart money. It's several. And if you check the descriptions on the educator site, you'll see which ones reference smart money. And again, they kind of fill in the blanks, because again, there are more nuances that I just wouldn't have time to cover in this short amount of time. So anyways, so that would be my entry. So again, I would wait for a slight pullback and then get in. But I can see, but now here's the other thing that I would have my eyes caught looking for, is that this point right here, well, I'm using the back of the arrow, this area right here is a potential area for reversal. Why? Because this is the last, this is the last sell candle before the market pushed up. So that's called a sell to buy. Sell to buy. That's the last sell to buy candle before it goes up. Now, again, in the beginning, I said, like, one of the things that's sort of different with the, again, how we look at the market, institutional wise versus retail wise, is that, see, this to me represents true support. Just the body of this candle represents true support. So for instance, if I were buying, this is a better example. If I were buying this, now here's my entry. I'm going to wait till price comes here, maybe about 50% of that red candle. And then of course we buy it up. Now, and where am I going to buy it up to? I'm going to buy it up to, I have to go to a higher time frame just to show you. I'm going to buy it up to this area here, this imbalance. Remember we talked about these areas of imbalance? I would buy it up to this area. So again, we talked about 232 pips to the downside. This would be 258 pips to the upside. So those really represent our options. So when you're trading, that's why it's important to watch the price. You have to learn how to watch price, set alerts in the market, don't jump in too soon, all those kind of things, because it's always 50-50. We don't know where the market's going. But again, let me go back to the 15-minute. But again, if I have an eye, or if I have an alert on this area, because again, this is resistance. Prices, we're going to see price have a reaction in this area. Okay? And again, why? I'll just show you. Because this is where price came from, this area. Oops. This is where price came from. The evidence is always to the left. Price was here, okay? And what did it do? It moved over here. It came back here. It did what? It went up, came back to the same area. That's a retest. Came back to the same area. That's a retest. Happens all the time. And again, when your eyes can see that, then you say, okay, well, price is going to return here. Last time it came here, what did it do? Last time it was here, it shot right up to the upside, right? Then it came back here. What did it do? It shot to the upside, okay? So again, there's a opportunity for when it comes here again, when price comes back down to this area again, what's there a chance for it to do? Shoot to the upside. So again, we're always looking. And again, I don't use too many pending orders. Again, depending on what time of day it is, depending on what I'm doing, I'm able to be close enough to the charts most of the time that I can set alerts. And then, I hear the little, alert sound off when the price gets into this area before I make a final decision. But along the way, I've collected a lot of information, And the way this particular pair has been moving, again, that's why for me, even though I've established some things, I would still kind of wait to see what price does in this area. But like I said, if I got this pullback, if I got a pullback up to the 50%, yes, I would probably go ahead and sell it. Let's see what I would get if it pulls up here and I sell it to here. Okay, so that's 36 pips to here. But guess what? I'm watching it if it come up here, it's coming back down here. But I'm watching it like a mug. I'm watching like a hawk. I'm gonna set an alert down here. And I might even, set a, it's really a short move, like 36 pips. But, if it's there and I could get it, I'd take it. But again, when price gets down into this area, I'll be very, very cautious to see what it's going to do. If it's going to reject off of it and take me back to the upside. So I'd probably be looking to get out of it right here. Or if it's going to push through this area, and then I know that, I would be good to continue on into the with that bearish movement to the downside. Might sound I sound a little confusing, but it's just you just got to keep watching this. You got to keep watching price. And like I said, the way this USD CAD is just not really giving me a real clean move. So I apologize that I picked this as an example, but I think it does represent a good example in that regard, that it does show us so much and the opportunities that we really have to keep an eye out for as best we can. But in a real clean move, yeah, you just really need to pick a side. You need to pick a side, and that's where the short stops come in, because if you're wrong, and again, it's okay to be wrong. If you're wrong, then you're not, it's not killing your bank account. You get out, you take your little lump, and then you reassess and say, oh, okay, that here's what I'm gonna do now. You have you have your backup plan already. Here's what I'm gonna do. If it doesn't do this, I'm gonna do that. If it does this, I'm gonna do that. So so there you go. And again, that's at a real high level. That's what smart money kind of represents. Let's see. I got just a couple of minutes if y'all bear with me. I wanted to get to the part where I was telling on myself because and I know you hear people talk about journaling, and here's why it's important. And I'm not talking about just the data. I mean, the data is part of it, but you do a data capture where you look at, I was in USD CAD on this 5th of June, blah blah blah, and I was selling it or buying it or this, that, and the other, and that's all good information. But I've learned to take it to another level where what really helps me, because when I have a loss in the market, it's critical. It's absolutely critical that I learn from it. I have to go back and look at, okay, well, what happened here? And I got caught up into this. Let me take everything out. I got caught up into this, and I paid a price. And again, but the good news is I can learn from it. I can share what happened, and be determined that it's not going to repeat itself again. And I took out everything. Let me try to bring it back real quick. I had the man. I should have left the markings on the chart. Let me just give you one price that I was in at, which. Okay, what's that? 33937. All right, 33937. 33937. 33937. I like red. 33937. 33937. 33937. 33937. No, that's not right. I can't even see. 35609. 35609. 35609. 35609. Okay. All right, here we go. I'll give you a quick example of mistakes I made. All right, and how you can learn from this. All right, so where the yellow line represents where I got into a trade, okay? And I got into this trade on a buy. Let me break my arrow. I love my arrows. Try to be quick about this. So I got in where the yellow line is, okay? And here's what happened. I was in a trading session early that morning, and I think this was Wednesday. I was in a trading session. It was Wednesday or Thursday. But anyways, I was in a trading session, and a buy was called on USD CAD. I got in the buy, hit take profit. Okay, boom. So following that, I saw the market come back to this area. Okay, I saw the market come back to this area, and I thought I was banking on the fact that, and we talked about this, I was banking on the fact that I had identified this area of imbalance, and I saw the market pushing up. I was banking on the fact that the market would probably continue to move in this direction, because again, I got all this imbalance over here to the upside that needs to be filled in. So that's really what I was hoping and calculating based on my technical analysis would happen. Now keep in mind, let's do this. Let's move. Where's my replay? Okay. So at the time that I'm making my analysis, everything, only thing is here is what you see. So again, all I see is the market pushed to the upside from down here. I'm thinking it's a continuation because this, here's the target. Market has to come over here in balance. I'm sorry, to reestablish balance, okay? Now, what really happened, what actually happened was that, let me move this guy, I need my, what actually happened was that, and here's my lesson. What actually happened is, hold on one second, let me do this again. I don't want to see that. I want to get over. Okay, here we go. That's even better. So, okay, so I see price pushing up. Like I said, I'm thinking I'm gonna get a continuation to the upside. I didn't. What I got was, what you'll see here, boom, okay. That's what I got. I wound up getting, price just came back up to an established what? What is this? This is what we talked about before. And like I said, the market is going to do what? It's going to search and destroy, equal high. Remove this. And here's the equal high from over here. I got to look left. You got to look left in the market to see what else is there. So once this area over here had already been established, once price came back up into this area, now I have equal highs. So I know that there's a very high likelihood that price is going to come back up to this area and reverse. And that's what it did. Off of this bullish candle is what I saw. I saw this bullish candle going up, and I said, okay, it's going to push through because, like I said, I saw the imbalance above it. But what happened was, on the next candle, I got this engulfing bearish candle. Okay, so my first mistake was I was trying to get into a trade while the candle was still moving. So I didn't wait for the candle to close and then see if the next candle was going to open above the this area of equal high. That's mistake number one. I should have waited to see if the next price was going to be bullish, and on top of that, I would have had to wait for it to break and then retest the area before I would have gotten in. That would have been actually the ideal thing, to wait for the price to break, retest this area, and then there would have been a strong likelihood that it would have took off in the direction that I would have wanted it to, toward that area of imbalance, which, like I said, exists way up here, okay? But instead, like I said, the reality of it was I got this engulfing bearish candle, which, hold on, guys. Hey, Cher, I'm on a meeting. Is everything okay? Huh? Okay, give me a second. Call Kaya, please.
I did.
Okay. All right. Okay. All right. Give me a minute. Okay. Give me 1 second, guys. Okay, thank you, guys. Okay, so all right. So what I didn't see was this engulfing bearish candle to the downside, which, again, I know is a indicator that or really represents at this point that the sellers are in charge, and they're going to take them out. They're taking over the market. So at this point, when I see this candle, I should have, again, that should have been enough. And again, if I had just been patient enough, this is just only 15 minutes. So all I needed to wait is for 15 minutes to see, oh, wow, I got this engulfing bearish candle. So now I know the sellers are in control, and guess what's going to happen? It's going to push the market down. That's just all I really, the big mistake was just my impatience. All I needed to do was wait. All I needed to do was wait. And it would save me a whole world of hate or hurt come later on. And then the other thing, of course, as we just continue to let this run, let's move this out the way. I never even got close to what, because the market continued to push to the downside, to where what we saw earlier, where actually the market pushed, I don't know, man, shucks, probably a couple hundred pips to the downside. Because remember, on the higher time frame, we saw that gap in the market, and guess what price eventually did? Eventually, it went to find and fill that price in the market, that imbalance in the market, to the downside. It has yet to get to the imbalance that I had identified on the upside. So my problem is, of course, well, two problems. One problem was I stayed in the trade way too long. I should have gone ahead and cut my losses. A lot of times, I'm not suggesting that you do this, especially if you're a new trader, but you know, I oftentimes do not put a stop loss, because again, I'm near the charts, I'm watching trades, I'm managing my trades, but I was just stubborn for some reason, because again, look at all this momentum to the side, okay? All this is just, you know, again, this is a 15-minute chart, but you know, for the shucks, next couple, that was at least a day, all we're seeing is just movement to sideways, and I'm getting little, you know, getting hints here and there to the upside. But now you start seeing, you know, the market has broken structure and it's clearly making a, you know, rapid push to the downside. And this is probably wrap up in a second, but to where we are in the market right now. But it went down, these wicks right here filled in those areas that we saw earlier on the day chart, that the gap in the market. Let's just look at that real quick. So you see that's all filled in by this candle here to the right. That's all filled in, that area there. So we've completed that. And what we went over before is either the market's going to push more to the downside to this area here, or it wants it, if this area right here serves as any level of resistance. Just grab my arrow one more time. If we'll see how it reacts off of this candle right here, to make a determination whether or not it's going to push to the upside or not. So the good thing is, and what I'm gonna hold on to is that, I'll go back to the day, guess what price is going to do eventually? Price eventually is going to come out of this seller, and it's going to find these areas of imbalance. It's going to find them. It's going to get here, and it's going to get here. It's just a matter of when. Now, the other part that sort of complicates it, but then also kind of sheds light on it, I just switched over to the DXY, is what's going to happen with the dollar. So for real, after all that's said and done, what I'm going to do, I'm going to continue to watch price in the areas that we talked about. I'm going to continue to see, but what I'm really curious to see is what happens with the dollar. We just got the unemployment information out today, the farmers unemployment, what's it called? The farmer FOMC or whatever it's called. But anyways, those key indicators came out today, along with the Canadian unemployment or employment rate and such like that. So again, the dollar is very weak. So just, you know, really just gotta wait and see. So sorry for all the kind of long-winded explanation of things, but again, the market is very nuanced in terms of the approach. My suggestion, certainly, as it is always, find an educator, find a mentor on the platform. Use folks like me and the other people that are available to help, you know, kind of just supplement or reinforce some of the stuff, or maybe, you know, we might have a little bit more time to touch on some of those areas that the educators may, you know, may not do, in your opinion, as good a job on. But learn from these guys, learn from these men and women, learn from these men and women. If you're not getting in with these men and women, you're, you know, to me, you're wasting your money. If you're not getting in these live sessions, to me, you're wasting your money, because these are the men and women that will make you consistent, profitable traders. You find your educator, you find your style, and you may move from style to style. You may, like what I'm doing. I've, you know, been through several of the educators, and actually the benefit for me with that is that I can kind of, you know, combine, again, back to the Bruce Lee, no way as a way. You're in a fight, you just win that joint. So, you know, use everything available. So that's been very, very helpful for me. To take a lot in and you know, be able to move around the markets and such. But anyways, that's my suggestion, and good luck to everybody. I'm gonna be here back here next Friday. Hopefully there was a little bit of value sold into you're getting on with me. I'm very humbled that you guys take time to do that. If I can make this better, let me know. My telephone number, let me put that up. Let me put that up. 240-273-2645. I'm available anytime, 2645. Help and assist any kind of way. Whoops. Again, just, you know, just glad to help. So anyways, take my number down. Oh, see, I'm getting fancy now. That's my IG. Yeah, that's when you hit me on my IG. All right. So, I'm on the radio tomorrow. Me and Aruna Karoma, we're on 106.1 Praise, 106.1, and Facebook Live tomorrow. And again, our program is Straight Talk on Forex and digital currency. Tune in. We're glad to have you as a listener. And anybody have any questions or anything in the chat? Did I miss anything? I'm terrible about looking at the chat. Let me look at the chat. Anything in the chat? Anything in the chat? One thing in the chat. Check out, NAS 100 buy or sell. Yeah, we could talk about that. I wouldn't be the one to really advise anybody on the indices. I follow, when it comes to indices, I take directions only from Kim Torres. I've had some success trading NAS 100. Actually, I guess just to say, I have had some success trading NAS 100 again, but just following the same things we just talked about, looking for imbalance and trading to it, and again on the lower time frames. Just kind of, I guess you might call them scalp moves, but yeah. And actually, I was in on US 30 trade, and that shucks, man, probably went 2,000 pips or so yesterday. Yesterday into last night. It was a good morning. Good to wake up and see all blue. But anyways, I'm out, guys. Y'all have a great evening. Any questions? If not, please have a great evening, everybody. And thanks for getting on. I really, really, really appreciate it. You guys take care.